Do you want to turn a small portfolio into $1 million portfolio? In this video, I will show you how to scale a 10,000 portfolio all the way to 1 million using smart option strategies without gambling or taking huge risks. These are real strategy used by traders and investors in 2025, and I'll break it down step by step. Before we jump into the numbers, let's talk about the mindset. Reaching 1 million isn't just about making big bets. It's about compounding, consistency, and risk control. What you need is a long-term outlook, disciplined execution, and the ability to stick with a plan through market ups and downs. Most people fail not because of bad strategy, but because they lack of patience or taking on too much risk too fast. Imagine you're starting your investing journey with 10,000. Before jumping into options, the most important thing is to build a solid, safe foundation. You want to protect your capital because without that, you can't play the long game. Step 1. Keep 10 to 20% of your money in cash as dry powder. Why? Because having cash on hand means you are ready to act when opportunities come. Maybe a stock price drops suddenly or a good option trades appear. Cash also cushions your portfolio during market downturns. You are not forced to sell at a loss or take risky trades just to stay afloat. Step 2. Own at least 100 shares of a quality stock. Why 100 shares? Because owning 100 shares means you can sell covered call against those shares. Covered call are a conservative way to generate income. You collect option premium by giving someone else the right to buy your stock at a set price. For stocks, think about companies with strong fundamentals or growth potential, like Palantir or Nvidia if your account size allows. Owning shares give you two benefits. You can earn dividends. You can also generate extra income from option premium, reducing your overall cost basis. Step 3. Sell cash secure put on stocks you want to own at a discount. Selling cash secure put means you are agreeing to buy a stock at a lower price than it currently trades and get paid a premium while you wait. This is the smart way to bring in regular income from option premium, potentially buying great stocks cheaper than market price, and avoid chasing overpriced shares. If the stock price doesn't drop to your strike price, you still keep the premium, boosting your returns. At this stage, the goal isn't to gamble or chase risky trades. It's about capital preservative and generating steady cash flow. This disciplined approach builds your option strategies, grow your income streams, and position you for bigger trades down the road. Once you are comfortable, you can expand with strategies like the whale, lips option, and more advanced trades, but only after you master this basic. Now let's introduce the whale strategy, your best friend on the road to 1 million. Here is how it works. Sell cash secure put on stocks you want to own. If the stock dips and you get a sign, you now own 100 shares. You then sell covered call to collect premium. If the stock rises and your shares get caught away, repeat the cycle. This strategy generates steady cash flow and build wealth, especially in volatile market like we are seeing in 2025. As your portfolio grow from 50k to 100k and eventually 250k or more, you unlock new opportunity to scale your option strategies, allowing you to increase income and diversify your investments. Number 1. Trade multiple contracts to boost income. With more capital, you can sell more option contracts at once. For example, instead of just selling one covered call contract on 100 shares, you can sell 3 to 5 contracts, multiplying the premium income you earn each month. Number 2, diversify across sector. Don't put all your eggs in one basket. As your portfolio grows, spread your option trades across different industries to reduce risk. Look at sectors like technology, like Nvidia, Intel, or artificial intelligence and clouds like Microsoft or Palantir, semiconductor like TSMC or AMD, financial like JP Morgan, This diversification helps protect your portfolio if one sector faces headwinds. Number 3. Use LEAPs for effective exposure. LEAPs are long-term options, typically 9 to 18 months out or more, that give you exposure to a stock potential price moves without needing to buy 100 shares upfront. For example, buying a 2026 LEAPS call on Tesla or Nvidia means you control 100 shares for a fraction of the cost. If the share price increase, your LEAPS contract can increase dramatically in value, giving you the leverage. Combine LEAPs with covered call. You can also pair LEAPs with short-term covered call, sometimes called the poor man covered call. How it works? You buy a LEAP call options to gain long-term upside, then sell short-term calls against those LEAPs to collect income regularly. This strategy generates steady cash flow while letting you participate in big stock moves over months or years. As your portfolio grows, so does your opportunities, but also the risk. Bigger portfolio means you are trading bigger position sizing and often using more complex option strategies. Without proper risk management, this can quickly backfire and lead to big losses. Let's break down the key principle of risk management at this stage. Number 1. Avoid over leveraging with too many contracts. When your account grows, it's tempting to sell more option contracts to increase the premium income. But selling too many contracts at once is like putting all your eggs in one basket. If the market moves against you, losses can multiply rapidly. Always size your trades relatively to your total portfolio. Stick to position limits that you are comfortable managing. Remember, options amplify both gains and losses. Managing leverage keep your account safe during volatility. Number 2, manage assignment and expiration carefully. With more contracts, you will face more option assignment, which is being required to buy or sell stocks, and expiration. Keep track of your option expiration dates in a calendar or trading platform. Decide in advance how you will handle assignment. Will you keep the stock, roll the position, or close out early? Monitor your position daily as expiration approach. This help avoid surprises or false trades. Number 3, keep cash reserve to handle unexpected market moves. Even with conservative sizing, market can move fast and unpredictable. Managing a healthy cash reserve, usually 10 to 20% of your portfolio, give you the ability to meet margin requirements or purchase stock if assigned. Cash reserve also let you take advantage of unexpected buying opportunities or adjusting your position without panic selling. No journey to 1 million is smooth. You will face red days, volatility market, and tough calls. Here is how to protect your capital. Never sell naked option. Always have capital to cover. Use spread to define risk in volatile trades. Roll option to avoid assignment or manage losses. Stick to stocks with high liquidity and high option volume like SPY, QQQ, Tesla, and Palantir. If you are down on a covered call, don't panic. Roll out, roll up, or wait. Time is your airline. If you cross 500k, things get more interesting. You can now write weekly covered call for faster premium collection, sell puts on high IV stock for bigger premiums, use collar like buying put while selling calls to protect big gains. Trade event-driven options like earnings, play with defined risk. Allocate 5 to 10% to SPY 0-day options or other advanced trades, but only if you are experienced. The key here is scaling intelligently. At this level, 1% gain equals 5,000. Compounding become exponential. Track every trade. Know your win rate, average premium, and drawdowns. Use tools like Google Sheet for tracking option profit calculators to plan trades, broker tools like Thinkorswim, Interactive Broker, Tiger Broker, or Moomoo for data. The more you track, the faster you improve. Treat this like a business. You don't need to gamble on meme stock or chase 1000% gain overnight. You use options the smart way like a business. Sell cash secure put to bring in steady, predictable income while you wait to buy great companies at a discount. Use the whale strategy to generate weekly or monthly premium, compounding your returns. Deploy LEAPs on high conviction stocks to get leverage exposure without blowing up your account. And most importantly, manage risk like your future depends on it, because it does. This isn't about hitting home runs, it's about hitting singles and double consistently. It's about understanding that every $100 premium you collect, every assignment put that turns out into a great stock holding, every covered call you sell for passive income is another step towards financial freedom. Remember, 1 million isn't a fantasy, it's a formula. And if you stick to that formula, automate your discipline, and stay in the game long enough, the math will do the heavy lifting for you. If you are serious about building wealth through option trades and want to follow this journey in real time, make sure you subscribe, hit the bell icon, and join the community. If you got value from this, make sure to like the video, subscribe, and drop a comment. I would love to hear your thoughts. If you are interested to learn more about option trading, check out this video right here. I break down more strategy you can use to generate consistent income with options. Together, we are building step by step, trade by trade, towards that $1 million milestone. As always, until next time, trade smart and stay profitable.